Welcome back to another episode of Let's Tech About It, where we'll be actually interviewing Bhavnani, who is I don't know actually anymore since he's always bouncing projects, but I'll let him introduce himself. He's got a couple cool projects going on, and I think he's better suited to introduce himself as well. So Jay, how about you introduce yourself? Tell me what project you're on right now, because the last I remember it was Rari Capital, right? So tell me about what you're doing right now and just who you are.
Yeah. Hey, everybody. I guess I can tell you a little bit about what I'm doing now, and then we can go into the history if that's interesting. Currently working on a new project called Pentagon. Started it as a side project for me and my co-founder. It's basically a way for us to go and contribute to a bunch of different projects, because I realized I like doing the 0 to 1 in the crypto space and in taking projects to market, and then maturing them with founders to take it from 1 to 100. So basically what we do is we advise and consult and strategically work with a wide set of projects, obviously all in the Web3 space, and that's the first thing. And then the second thing that we do is we incubate our own protocols and our own Web3 startups inside of Pentagon directly. And it enables us to basically focus and work on all of the cool and fun things that we want to be able to work on.
Yeah, and you actually mentioned the Web3 space. So that is the space that you work in primarily, right? And that's where most of your projects have been. So how did that start? First of all, I think that everyone here should know that you are a college student, that you're not actually out of college yet, and it's something you've been doing since high school. So maybe earlier, but as far as I'm aware, in high school. So how did that kind of get started? Like, how did you even jump into the Web3 space at that age as well as that time? Because right now it's something that's popping off a lot, but at the time, even I didn't know much about Web3 in high school. So how did that kind of all come to light?
Yeah, so before getting into the Web3 space, my background was largely in development, iOS development to be specific. And one summer, I found myself working for Sean Parker's latest startup, which was called Screening Room. And Screening Room was all about getting movies in theaters to people at home, right? So you pay $40 and you get to watch a movie in theater at home. It's a pretty novel startup. So I was leading their iOS development alongside one other person, and it was a lot of fun. And one day, somebody on the team is like, "Yo, like all the money you make this summer, like you should just put it into Ethereum." And I was like, I don't think that's a good idea. Like it sounds like a scam. And then a couple weeks later, I see the word Ethereum on Hacker News, which was a site that I read every single day back then. And I was interested in it. So I started to do some reading, and I'll admit 98% of it went completely over my head. But the 2% of it that I understood, I was fascinated by it. So I started buying up Ethereum on Coinbase soon after, and the price started to rise, right? It went from 13 to $20, and I was like, oh my God, like I've nearly doubled my money. And then getting that adrenaline rush, and probably stupid in terms of risk management, but lucky in terms of history, end up putting my entire bank account in Ethereum before I know it. Start to ride Ethereum up, and this is at a time when Ethereum is quickly making moves from $50 to $300, from $300 soon enough to $1,400, and I'm like, oh my God, it's going to keep on going up. It's going to keep going to $2,000. And at this time, this was the ICO mania, right? When everybody's asking, how do I invest in this new cryptocurrency? There's only 3 listed on Coinbase, right? There were hundreds of others that were going up 100% every day. And everybody saw it as a way to make easy cash, right? New York Times, Wall Street Journal published articles about how the ICO mania was a great way to make cash. And well, they didn't talk about the risk, but people just didn't understand how. So I built a mobile wallet that made it easy for people to trade these cryptocurrencies, right? Using my background in iOS development and my newfound interest in cryptocurrencies to make it easy to trade these assets. That mobile wallet ends up being acquired by a company called MyCrypto, and it was during my time at MyCrypto that I stumbled upon this movement called Open Finance. Open Finance then got renamed to Decentralized Finance, and it was basically this idea that we can build financial applications on the blockchain. this was really interesting to me. And I spent most of my time at my crypto going super deep into open finance, or rather DeFi now, decentralized finance. And I couldn't stop thinking about it. And the team at my crypto wasn't so bullish on DeFi, but I knew that it was all I could spend my time thinking about. So before I know it, I stepped back from my crypto after about a year of leading strategy and start Rari Capital. And Rari Capital was a community-owned decentralized finance project that basically gave the power to the users by distributing I think nearly 90% of our token to our users itself, and made it so you could lend and borrow everything. It was a tough journey. The first 12 months were not glamorous. They were heads down in the trenches. And then most recently, obviously, after about 2 years, stepped back from my role there to be able to focus on a wide set of projects beyond just that one.
Yeah. First of all, also congrats on Rari Capital. I mean, it was earlier this year actually that you guys broke 10 billion in locked assets as well, correct? So that was also a recent development.
One bill, and it was
1 billion
late last year. Soon 10 bill. Hopefully.
Late last year. Hopefully, it'll be there. It'll be there one day. But yeah, the reason I actually brought that up was not just to bring up that massive number, but it was actually leading to my next question, which was how do you, in your area of expertise, like when it comes to like Web3, let's talk about Rari first, and then we can jump maybe to your more recent project if you're at liberty to share. But with Rari Capital specifically, how do you develop that kind of trust, and what was your steps with maybe your protocols, etc., that kind of allowed people to be like, okay, here, this is a company, this is something online who I've never seen before that I'm just gonna put my money into. Like, how do you even get to that stage, right? So could you talk a little bit about Web3 in the sense of that? How does Web3 automatically imbue trust, right? Because no one really knows if you're just going to steal their money or walk away with it. And that's always a risk at hand. But there is a lot of talk, and obviously Web3 is all about this control over your own money. So how is that imbued into Rari Capital? How is that done through, the technical side when it comes to protocols, and how is it done through as well as like the PR side? Like, how did you get people to trust you enough to be like, hey, I'm going to put my money in your tokens. I'm going to be able to actually invest through this method. So how did that even come about? Like, how do you get people to do that in a space where they never can see a physical product?
Yeah, that's a really interesting question. And as you say, right, it's a pillar of our space, this idea of trustlessness, right? Is you don't need to trust somebody. There's a lot of, before I even dive into this, I'll say, right, the Web3 space, as you mentioned, has blown up recently. And with this explosion of Web3 applications, you have both Web3 applications and applications masquerading as Web3 applications, right? Unfortunately, the amount of applications masquerading as Web3 applications far exceeds the amount of actual Web3 applications. It's quite unfortunate. So when discussing the masquerading aspect of it, is we can assume that these are like centralized companies that are using cryptocurrency and Web3 and smart contracts as a way to evade regulation, as a way to cover up what they actually want, but they are operating as a centralized company when you look into it. Versus Web3 native companies, right? Maybe not even companies, Web3 native projects and DAOs. These are companies where you literally can't do anything if I wanted to, right? In the later stages of Rari Capital, we were a fully distributed DAO. So what that meant was, if I ever wanted to update the money, or we had a yield aggregator with like a ton of money in it, right? Over $100 million at one point, right? If I wanted to just send the $100 million to myself, I wouldn't be able to do that without a token holder governance vote where I could get everybody else to say, yeah, let's send Jay all of the money, right? So I literally can't rug the contracts. I can't screw over the system. There's a lot of projects that do have the capability to do that, but true Web3 projects cannot do that. And because of that, you don't need to build the level of trust that you do in a Web2 startup, right? In a Web2 startup, PayPal needed to work so hard to build its trust with users. They needed to go and send $5 to every user who was signing up in the early days as a way to overcome that hurdle. Whereas in a Web3 startup, you don't need to do that. And that happens for two main reasons. A, decentralized governance blocks bad actors from conducting malicious activities. And then the second one, and it's the reason that the first one is possible, is that all of these systems are based on smart contracts, right? A smart contract is basically a legal contract that is written by code, right? So what that means is if a malicious activity is going to be happened, or if it is going to happen, it is pre-specified in that legal contract or that smart contract to the point where anybody could read it. So if a malicious activity is about to happen, people are going to read it, they're going to see it, they're going to know exactly who did it, right? So whereas it may be possible, it is not going to happen as much because it is all open and because people will do their due diligence. Obviously not everybody, but we can imagine that the people who are parking vast sums of their own money will be doing that due diligence. And I mean, long story short, Web3 is trustlessness. That's what it's all about. There are a lot of people who say that they're Web3, but they don't actually believe in any of this stuff. Versus Rari Capital never had a problem building trust because we embraced the principles of Web3.
Right. So when you say embrace the principles of Web3, that also probably factored into when you were building it out, right? So when you were actually building out Rari Capital and all the technical side of it, what did that look like too? Like, it's not just about sales and the business idea and like how you're selling it. It's also about the back end. So who was part of that process? Was it you? Was it co-founders? And what were some of the hurdles there? Because again, when there's a person starting a web developer on like just making like HTML, CSS websites, it's very simple. They go online, there's tutorials on tutorials, right? But how did you go about making something that's completely brand new, that, you know, has limited documentation, probably at that time, still to this day is not like easy to read documentation, right? Like it's a tough space to break into if you're looking from the technical perspective. So what did that look like from the technical end? And were you a part of that conversation as well? Because you were talking about iOS development.
Yeah, was definitely a part of the conversation. After my last project, I decided I don't really want to be extremely hands-on with any coding. So brought in David Lucid to be my CTO and co-founder for Rari Capital, and he's moving over to Pentagon with me. And basically the cool thing about this was he's a beast. And not only is he a beast programmer, but he knows how to train people and how to train people up. So if you go to crypto Twitter today, you'll find that a lot of crypto Twitter has been trained by David Lucid and by his side. So that's the first thing. But in terms of what that process looked like on a more tactical basis, me and David's working style is pretty interesting, right? I call him at 2 a.m. I tell him the crazy idea, and then I wake up in the morning and he's implemented it. And it's really, really cool. But I will say that writing code and iterating on product in a Solidity and in a blockchain environment is very different than writing code for just an iOS app. And that's for two main reasons, right? The first is a lot of this is immutable, right? Whereas you go put up an app in the App Store, you can just submit updates whenever you want. If you find a bug, it's fine. You just submit an update a few days later, it gets fixed. Here, you have to go through decentralized governance, right, which has its own woes, right? You need to go through all of these steps, so you can't assume that you can always upgrade. The second piece of this is you're managing a lot of money, right? At its peak, Rari Capital had $1.5 billion under management. If we had one bug in the code, that meant a lot for us, and that wasn't good for us. So just given that, you need to conduct proper security procedures. What we constantly do is we collaborate with a wide variety of smart contract auditors who basically deeply review every character in our code before it is submitted. That means that we don't have as fast of a product iteration cycle, but it means that we have more robust and secure code, which is what matters to us.
Got it. And this is something that obviously you probably picked up through previous experience as well, because it's what Rari Capital was in the first project that you worked on. So what are some of the biggest like highlights, or I guess you could say tips, but when it comes to like skills that you've learned or lessons that you learned, what are some of the biggest ones that have factored in up to this journey that you continue like to say, will keep in mind when you start working? You continue working on Pentagon actually. So like, what are some things that you've picked up along the way that you know are invaluable to working in this space? Like, what can you not afford? What mistakes can you not afford if you're going to enter the Web3 world from a CEO founder perspective? Because a lot of these companies, everyone says startup fails. Like Web2 startups fail all the time. But what is it about Web3 startups? What is it about Web3 projects that are just like, do not make this mistake, otherwise you're done? So what are some of those things that you've picked up along the way?
Yeah, there are about 500 different landmines that you're looking at there. But at a very high level, right? First of all, if you're managing money, you need to take the proper security procedures, right? That is something that the weight of a hack buries a person more than anything else. That's the first thing I'll say. And then the second thing is Web3 and working in this space is the most interdisciplinary industry I have ever come across, right? It is not important to, if you're a killer programmer, it is not important to just be a killer programmer. You need to be good at talking to community. You need to be good at operating and doing art and understanding GIFs and understanding memes and understanding mimetic theory and all of that stuff, right? This space is literally the most interdisciplinary space, and being able to understand that will put you 10x ahead of everybody else. And beyond that, the simple startup things, most people try to put them aside for Web3, but they all apply to Web3. Maybe you need to transform or get a little bit creative with how you modify it. But at the end of the day, it's like these are still startups. They still operate like startups. There's some new dynamics at play, but they aren't so different from everything that Y Combinator says.
All right, so before we get too far deep into this, I think something that people might have grazed over in this very episode is that you are still in college, right? So you're still experiencing life, right? And so how does that look like for you at this young of an age, having that work-life balance, right? So you had Rari Capital going, you stepped back from that, you've got this other project going on right now, Pentagon, which we'll dive into in a little bit, but you've got that coming up, you got that going right now too. So how are you able to balance all that, being a college student, as well as not just maintaining, you can talk about your college degree a bit, because I know the program you're doing is a little bit unique, but apart from that, just being a 20-something year old living his life. I mean, it's not just all work, and that's something I don't want our podcast to come across as. So how does that look for you? Like, what is your day-to-day, and how does that make you feel that you're doing all this while someone your very own age at USC, where we both go, is like partying every single day? Like, what is your like take on all this, like doing this at this young of an age, balancing all these things all at once?
Yeah, great question. And I think what it comes down to for me is like, I've been in the space for a while, and what I noticed is basically everybody burns out after maybe 2 years of being a founder. It's like, okay, what can I do to not burn out, right? And it's like I spend maybe 18 hours a day behind my computer, right? Just doing work stuff. And then what I realized is, and my key to not burning out has been, give me that 1 hour a day where I don't need to sit behind my computer. And I don't need to be constantly talking about crypto, Web3, because I love it and I'm ready to talk about it for 19, 20 hours a day. But the thing is, the key to survival and the key to longevity in this space will be the diversification of conversation, the diversification of time, which will take place. And honestly, the best way to do that is through college, right? Being able to be surrounded by a bunch of people, most of which don't even know what I'm doing. That is my preferred route, because it means that I don't need to talk about this stuff for that 1 hour a day. And that 1 hour a day becomes something pretty special, right? Where I can actually get my head out of Web3 and be reminded on everything that we're working on in line.
Fair. I'm sorry I totally found out about your secret endeavors and I'm not interviewing you for a public podcast. But no regrets here. I'm just doing my job. But yeah, so So you've kind of realized the benefit and the importance of having that, right? And that's why you're also going through college. So now that you're like, you had your time in college, you jumped into this next project, Pentagon. Correct me if I'm wrong. Is it Pentagon or Pentagon XYZ, or like, tell me a little bit about that. Like, tell me the name. Tell me what it's a little bit more, maybe detailed about what it's about, and then maybe one or two projects within Pentagon that you've gone into so far.
Yeah, so it's about first of all, it's called Pentagon. Just our domain and Twitter is Pentagon XYZ because Pentagon was taken by the Pentagon. So what we do is pretty multifaceted, right? Where I've been spending a lot of my personal time is on the incubation side of things and on building protocols from the bottom up. End of last year, obviously I was leading Rari Capital into its merger with the Tribe DAO, and I started to develop this theory that had transformed with time, that protocol businesses aren't going to be the future, right? This idea of, look, we're just going to throw a token in here and like it's just going to work and go up in value forever, right? It's like that's not going to work forever. And I realized, look, most token models just don't work. So what does that mean is we're going to trend towards an industry, if my thesis is true, where there are just open protocols without tokens. There's just code that anybody can use. There's no value capture. They're basically public goods. So Pentagon has been working on developing some of the most cutting edge public goods. And that's where we spend the vast majority of our time. We monetize it through our own special techniques that we don't need to get into on this podcast. But essentially, the public good that I've been spending a lot of my time thinking and dreaming about is called DPDs, right? And that stands for Decentralized Programmable Data, which is definitely a mouthful, but it's something super exciting. And it kind of changes the way that you think about the internet and internet real estate, it changes the way that you think about the internet, I'll say, right? So what it is it's basically a piece of data, and the data can be anything. It can be an image, it can be a video, it can be a website, it can be anything, right? So imagine you have this data here, and then you have three parameters for the data. Who owns the data, who can write to the data, and who can read the data. And these are all three blockchain addresses that can be programmed, again, on the blockchain, right? So the owner owns that data, the editor edits the data, they can do whatever they want with the data, and then the reader has permissions to read the data. That can be anybody, that can be a select group of people, that can be anything. And for each of these, you can set it up so that I can set one person up to own it or be the editor or the reader. I can set it to be a group of people. I can set it to be everybody who owns this one NFT has access to this. I realize we're talking pretty abstractly, right? But that's what the primitive is at a very high level. What is this going to be used for? And how is this going to be used? So you can do a ton of really, really cool things, right? So one of my favorite examples is there's this website called $1 Million Webpage, right? And it's basically some guy, I'm pretty sure he wanted to go to MIT and needed a way to pay to go to MIT. So he created $1 million webpage where you could buy each pixel for $1, right? And by buying the pixel for $1, you could decide what goes on that one pixel, right? Imagine that at scale, right? So you have a page of 1 million pixels, and each one is its own DPD. Now you can buy access to one of those for however much people set it for, which is the same as $1 Million Webpage. But that's where the similarities stop. Is now the person who buys it can do whatever they want with it. Instead of just setting it to be an image, they can set it to be a website. They can set it to do anything that they want. They can set it to be a video. So you have more programmability with it. But the coolest part is now, because it's on the blockchain, it's financialized. So I could go and send it to I don't know, I could go and send it to adamsandler.eth, right? And suddenly he has control to edit that one pixel. Or I can go and sell it. I can go and sell it on OpenSea and say, look, I bought this one pixel, but it's the center pixel on $1 Million Webpage and it's super valuable. Come and buy it for $10,000. And you can create basically secondary real estate or secondary markets around internet native real estate, which is fascinating, right? So another example here is Google.com. They replace the image on Google.com every single day, right? Imagine if you could be bidding per second to get control to be able to modify that image. That's the future that DPDs enable. And that's only the first dimension. I realize we may be getting even more abstract here, but some of the other really cool things that you can do with this is you could hypothetically set up a decentralized Wikipedia, right? A Wikipedia where everybody has data that is hosted on the blockchain, so it's unstoppable, but you can basically set certain people to be able to modify certain things through these cryptographic rules. Where we're starting with this is basically decentralized applications, meaning that there's a lot of really cool decentralized protocols, but they don't have decentralized front ends. We're going to be starting by making decentralized front ends, or their front ends actually decentralized, which I'm super excited about. But I'm even more excited about, like, this is a whole new Lego piece for the internet, and seeing where people go with it and seeing how people use it, because it's going to be fascinating.
So like you were talking about this product you guys are working with in Pentagon, as well as maybe other products that you are working with in Pentagon or see outside of it. So from your experience as well, how can you tell that there is a project, there is a product, there is some kind of software that is being built in the Web3 world that is going to be long-term, beneficial, and not just like a fad that someone just created for a money grab, right? So what are some of the indicators for that, and how do you intend to build that kind of repertoire within your Pentagon projects as well? Because that's a big problem with the Web3 space, and there's a lot of noise out there right now. So what are your indicators? What are you looking for? And what are something you suggest to maybe other founders who are trying to build in that space?
Yeah, I mean, the first thing I'll say is there are a lot of Ponzi's, and there are a lot of those projects that are masquerading to be Web3. In terms of how do you assess and how do you build projects that aren't masquerading as Web3? So there's a path for each of those. So we'll talk about the assessment first, right? In order to assess that a project is not a fake Web3 project, you have to look into the team. You have to look into long-term alignment. If they're taking 4-year vesting, you can pretty much tell that they're long-term aligned. It's crazy that in Web3, people just don't even think about 4-year vesting. They either have a bunch of liquid up front or try and make it 1-year vesting, which is really unfortunate and shows how short-term thinkers that the team is. Beyond that, I also feel like the more projects that you just look at, you start to get a vibe, right? Based on the things that they're talking about. Are they talking about their project, or are they talking about their token? Are they talking about their investments, or are they talking about their product, right? Really understanding their sense of priorities by looking at the team's vesting, by seeing what they're talking about, and also seeing what they're working on. If they're spending 99% of their time on tokenomic design and 0.01% of their time on their actual product, and that's the case with a lot of these projects, then you can tell that it's a project that doesn't give a crap about Web3. In terms of how do you build a project that is truly Web3, is you follow the principles of Web3, right? You're decentralized, you're community owned, right? You actually don't just say these things, but you embody these things. And I think that's the biggest piece of this, is you don't just say you're decentralized, but you are decentralized. And that takes place in governance, that takes place in token distribution, that takes place in 100 different ways, but actually embodying these principles instead of just pretending to be them.
Yeah. So on that note, can I ask, like, maybe what are some of your, like, standout, projects that you've seen or companies that you've seen recently? Is there anything in your head, apart from your own, obviously? Don't worry, I'm going to make sure you get plenty of praise for that in the description below. But apart from your own, are there any kind of standout projects that you want to talk about, maybe that are emerging in this space that you've seen?
Yeah, the one that I've had the most fun going super deep into recently has been Nounsdale, which is an NFT project. It kind of blends NFTs and DeFi. It's fully on-chain. It has fascinating mechanisms behind it. It's been around for a while. I think just going deep into the mechanisms behind this, we're seeing rise of the DAO that I would say is actually succeeding at being a DAO. And when you see a DAO succeeding at being a DAO, you see a ton of really cool opportunities and a ton of really cool, just like, how to put it, a ton of really cool possibilities. I'll end it at that. But it's one of the most exciting projects in the space that, like, and seeing it just gives me a ton of energy, right? It's just like, there aren't many people doing this, but these guys have proven it's possible.
So obviously going through this space, startup space, is always a difficult thing. You're always going to face humps and hurdles, and you're going to face even more when you're, an 18, 19, 20-year-old trying to sell someone on an entire multi-million-dollar company, right? So with your experiences, what are some of the hurdles, just maybe one or two hurdles that you faced? And what do you kind of recommend to people who are young founders, right? Who are hearing a lot of, like, for lack of better words, shit talking from other people about what they're, like, able to actually accomplish, and even if their ideas are even reasonable. Because a lot of the ideas in the Web3 space don't sound reasonable when you say it, because it's just way too new, and that's scary to a lot of people, as well as people who are older, right? Like, I don't think Warren Buffett has said anything kind about NFTs since the beginning of his time. So how do you actually come that, and what are some advice you have for young founders who are working in this space or trying to make it in this space?
Yeah, I have one piece of advice here, and it is, like, I feel like you can use that, right? You can use that energy and everything that everybody says to, like, fuel you, right? It's like, okay, Rari Capital was meant to be this, like, yield aggregator, and then when we switched to lending and borrowing, everybody's like, there's already the people who do lending and borrowing. What makes you think that a bunch of 18-year-olds are going to do lending and borrowing better than them, right? And it's like,
Yeah,
they each had $10 billion. They were backed by the biggest VCs. They had all of the chips stacked against us, right? But it's like, we were just like, okay, and then we did it, right? And it's just like, use that, and use everybody saying, no, you can't do it, no, you can't do this, no, you can't do that, to help you, right? And prove them wrong, and you don't need to go to them and tell them that you proved them wrong, because they'll likely know. And that feeling and craving that feeling is probably one of the best parts of working in this space and trying to fight the good fight.
Yeah, so follow-up question and last question on that topic as well. If you were to jump into the Web3 space at this time, where would you recommend someone starts? If they have zero experience, if they got nothing, is there some kind of newsletter out there that you said that even you used to, like, read and check into? Like, where would you start if you could start again right now? And I'm talking in any way, on the technical aspect, a business aspect, whatever side of Web3, where would you start if you could start over right now?
Yeah, there's two things. The first is Bankless, the Bankless podcast with Ryan Sean Adams and David Hoffman. Amazing. They also have a newsletter, which is equally amazing. And then Darren Lau's The Daily Ape, just daily updates on everything that is going on in the space. Don't know how Darren does it, but he is on top of everything in the space. So between those two things, you're pretty much set, and you'll have captured 90% of what's going on.
Sounds good. Cool. Any and one last thing, just as a last in the air, are there any regrets that you have, possibly, when it comes to working in the Web3 space, when it comes to your previous projects? Like, is there anything that you're just like, damn, I should have done that? But honestly, it sounds like you have less than most if you were getting into Ethereum when it was at $20. But do you have any regrets whatsoever on that case?
I mean, plenty of mistakes. I wouldn't say any regrets, right? Because it's like a lot of those mistakes brought on fortunate happenings through, like, some second or third order consequence, right? So it's like, yeah, it may have sucked in the moment, and there were a lot of moments where it sucked, but it didn't do anything besides help us over the long term.
Awesome, cool. Well, thank you for being on this episode, and I hope some people can pull away some really good knowledge from what you've said, as well as inspiration, because people need a lot of inspiration when it comes to Web3, and it's a very new field, so I hope it helps some people out there.
Awesome. Thank you.